Welcome to another day in the Matrix. This is Red Pill Podcast 147. Hope you're all having an amazing weekend so far. Appreciate every single one of you for joining. Make sure before we kick this one off that you get comfortable, relaxed, to go ahead, grab yourself a cup of coffee or tea if it's the morning time, or a glass of wine or beer, or any beverage of your choice if it's a little bit later out there. I hope you're all having an amazing weekend so far. We can see that we're heading towards the full moon, just a couple days, and the market is in fact correcting as we speak. So we have a lot to get into today. Mostly going to be covering the charts because I have a big decode coming out soon, and I don't want to take up too much of our time today with that. Needless to say, you're all going to be more than prepared for what to expect this upcoming week as usual. So if you're new here to the Wolfpack, welcome. So great to have you here with us. If you have yet to get Discord server access, please send me a direct message here on Patreon with your Discord username and the last four numbers after your Discord username. Please do not comment below in this post or send me an email with your Discord details. I won't be able to get you onboarded that way. Only following the instructions I just shared. Appreciate it. And we're doing amazing with the coin voting system as usual. This week we will be covering Stronghold token, since I believe I have a chart that I'm going to be able to do some TA on. I wasn't able to last week, although that got a lot of votes, so we'll be taking care of that in this week's Red Pill. We'll also be covering Avalanche, Filecoin, and Moonbeam, along with, of course, the Bitcoin, Ethereum, and XRP analysis. We'll also be touching on the Bitcoin CME chart because we have some important updates on that, and a little bit of words of wisdom on the stock market. So let's get straight into it. We are aware that we have moved through the Bitcoin ETF season, and we've now had one full trading week since. The market is still down more than it was before the ETFs were approved, exactly as we anticipated. And now we're moving closer to this full moon on January 25th. The market is just following the moon cycles as it usually does, regardless of all this exoteric Bitcoin ETF stuff. Again, it was just a big distraction. It was all priced in advance. We were all prepared for that. So we have this upcoming Thursday will be the full moon. Expect the 5-day window around the full moon to have a more quote unquote bearish energy. That would essentially be between now and the end of this month. And we have the next FOMC meeting in about 10 days. So it's right around the monthly close for the market. It's actually exactly on the day of the monthly close. And since that's happening during a weekday, of course, we typically, or if not always, have Fed Chair Jerome Powell speaking on a Wednesday. That means that we will be having a weekly close for the entire stock market, Forex, as well as the crypto market all together at the same time. So January 31st is going to be a very big day, and we need to prepare for that. And that's what today's podcast is going to be mostly about. We do have one more podcast coming up before our monthly close, though, so kind of be preparation phase for that one. Now, getting back to this, you're aware we have the full moon coming up this week. You're also aware we have this FOMC meeting coming up in about 10 days, right on our market close for the month. And since our last podcast, the stock market has continued its bullish run, with both the S&P and NASDAQ breaking into new all-time highs. So we're going to be getting over to that really quickly. And as you can see right here, we have effectively broken into all-time highs on the S&P as of this weekly close that just came in on Friday. And heading over to the NASDAQ, you're going to see that's the same essence as well. We have cemented in and definitely moved into new all-time highs, even though we had this double top-ish effect around Christmas time. With that weekly closure on Friday, incredibly bullish. So now we have all the three key indices trading at all-time highs. And going over to the Dow Jones chart really quickly, Let me see if I have a chart that is effectively showing us what I wanted to get into today. Beautiful. Okay, so I have it. So we also have the Dow Jones hitting this micro, I should call it a micro golden ratio, the micro 1.618. It's big because we talked about this in advance. If we take from this microcycle top back in the beginning of August of 2023, and we pulled a fib down to this swing low that followed up on October 27th, you could see this 1618 fib, the golden ratio, is sitting at around 37,900, and we've effectively traded into that level. So that's big stuff. But one thing to watch out for is there is kind of a short-term bearish divergence forming on the Dow. So I would assume that this is giving us some signs of a correction is due in the month of February. But remember what we talked about with the S&P analysis last week, that we see the indices tend to be bullish throughout the end of March into early April. And I'm going to still consider that, even if we do get a much deeper pullback for the crypto market in February. The stock market generally can remain bullish throughout that whole time that the crypto market is correcting. And that's obvious as we speak, right? We have had a noticeable correction on Bitcoin, at least 17 to 18% into the same day that we had the stock market closing on all-time highs across the board. So we don't want to talk about it like this coupling or decoupling conversation as much as we have this awareness that the crypto market is specifically moving on eclipses. That's what matters most. It's not as powerful for the stock market indices because indices obviously are an index of these different stocks, these different publicly traded companies. The Dow being 30, S&P being 500 different companies. You get it. So the point here is when we're talking about Bitcoin, we're just talking about an isolated asset amongst the broader conversation that has become cryptocurrency. So we don't want to use the same markers that we would for when we do our crypto analysis and just carry that over into the Dow Jones chart, for instance. And that's what's kind of confusing with some analysts out there when they're teaching this stuff. They're missing the esoteric, and they're making it seem like there's a decoupling or there's a moment when they're coupled together, and it's just not the case. Everything is kind of doing its own thing, and there's moments where they're synced together in harmony, and there's moments when they're separated. And what gives you the answer, what reveals the truth of truths, is the esoteric, the astrology, numerology, and a gematria that's tied to specifically the asset. So it would work more effective looking at Apple stock or Tesla, for instance, than it would just be a broad indice like the Russell 2000. Anyways, I hope that clears things up for people that are newer here and perhaps people that just needed a refresher and reminder of how we're using this esoteric code. Just last thing to say, we have reached a technical target, so for this to stall out right now would not be weird, but given the fact that we go up into March and early April, there's still a lot of room ahead across the board for the stock market. And we want to keep our mind open to having some issues coming soon in the broader markets, just because we've been rallying off of Fed-only news. Meanwhile, there's more chaos and more disorder in the world than there has been in the last, couple months, couple years. Stuff going on with the war, etc. And we're still having new all-time highs all the time. So this market is purely Fed-driven. It's been the case for a long time now, but right now it's very, very noticeable that we're up this high across the board in the markets with, really no reason for there to be besides speculation. And speculation cycles end, and when they do, they trap in a lot of people who FOMO'd last minute. And this type of energy that we're getting near this top is showing me that a lot of unsophisticated money is moving in right now. It's assuming we're going to go substantially higher, and that's exactly what the market maker does before they pull the plug. That's just what happened with crypto, with Bitcoin. We saw all this FOMO energy coming in around 44, 46K Bitcoin. We rallied a little bit higher, but then it got pulled back. And now we're under 42K as we speak. Meanwhile, we should be way more bullish, right, according to the narrative, because of all these ETFs launching. But it shows you this kind of buy the rumor, sell the news thing is real, you know? Anyways, we're going to move on. I know you all appreciate the words of wisdom here and there about the markets and where I stand on some of this stuff, and I think it does round out the overall investment thesis. So getting back to the crypto market, for a while now, we were anticipating this move up into 47K, followed by a correction into around the 30K territory, somewhere between 31 and 33K on a technical correction. Note, I'm saying technical correction. That's not my opinion. That would be the TA. And to consider slightly below 30K due to the way that Bitcoin specifically tends to correct in a very dramatic way. It's a crypto after all. Cryptocurrency tends to overextend. And there's plenty of times where we get those moments in maybe a single day, and then we're bought back to the prior highs within a single trading week. That's how elusive this market could get at this time. So we also discussed the concept of a full 40% correction pretty much months ago. And if we were to entertain that, a 40% correction would be bringing us right to around 29K Bitcoin. Again, slightly below 30K. So essentially, anything below 30K is a gift, and it should be short-lived. Now, I'm aware that we have the CME gap around $20,000 Bitcoin, and I'm going to go over that just really shortly with you guys, and we will do a full analysis on the CME later. But you can see we have this gap up here around 40. We'll talk about that a little bit later, but we have this much, much lower gap somewhere between 20 and 21,000. Okay. Now remember, when this effectively happened was a black swan event to retail banking. We had this deeper correction on March 10th when Silicon Valley Bank failed, and then we traded bullish over the weekend, again on speculation, and then we broke out throughout the remainder of March, leaving this gap. So I know that this is in the conversation right now. Remember, the New World Order, the market maker, they're looking at the same chart you're looking at. This isn't rocket science, okay? And people are now becoming over-speculating that there's a large possibility for us to correct all the way down to 21 or 20K Bitcoin. And the one thing I want to remind people of who are thinking that way, and this isn't to disregard your belief system. I'm not here to tell you you're wrong. I'm just here to present the data as it is. People need to remember that the Chicago Mercantile Exchange futures on Bitcoin, it was just launched quite recently in the overall big picture of what Bitcoin has been doing since 2010, 2011. It just launched effectively at the end of the bull run. I believe it could be the exoteric reason why that bull run ended, even though I would disagree with that, because again, this is all running on solar and lunar cycles. So that's a side note, but the point that I'm getting to here is CME just launched in effectively 2018. It's missing 7 years of data, or 2 full solar cycles of data comparative to the regular Bitcoin spot chart. Okay, so I'm not trying to say that I disregard the gap concept, because remember, we've been following along some of these gaps, and it's been extremely helpful in us determining where the market's likely to go, but it doesn't outshine everything else. That's part of our conversation here, which is the all-time chart since Bitcoin's genesis and all of the data that came before 2018. In 2017, which is very powerful stuff to consider, because Bitcoin has been repeating the same cycle over and over again of having an all-time high in Q4, correcting exactly 1 year later to the cycle low, and then having somewhat of an automatic rally effect. It's the same thing that happened this cycle. We had Q4 2021 all-time high, 1 exact year later, we bottomed out, then we had an automatic rally effect. This isn't new. It's not something that just happened in 2019. It also happened in 2016 and 2012. Okay, so I just want to let people know that the CME gaps are a thing, but they don't need to be fulfilled. And also we have very limited data. Now, I'm going to share why I think it would be a low percentage chance for us to fill this lower gap. And we're going to get into this right here by just showing that from where we've effectively got rejected at around 49K, all the way down to filling this gap would be a 59% correction on Bitcoin. So look at where we topped out before the C19 crash, and we'll kind of get an idea of the similarities. This was a 60% correction, again on the CME data. If we were to look at it on the spot chart, it would be a 63% correction. Now, remember, I just showed you from where we've recently topped out around 49 to fill this lower level would be about a 60% correction as well. Well, that was after the entire world shut down due to the pandemic. So for me to entertain a correction this big right now, it would need to be because of an event that's as big. And since we are not in a Shemitah year or headed into a Shemitah year, this is why I don't entertain that today. So remember back in 2020, we were moving into a Shemitah. That was the ritual that we had for that cycle. And I'll break this down step by step because I think it could be very helpful, especially to people who are newer to this channel, because when we started off this journey here at WatersAbove, I was talking about the Shemitah and the Shemitah cycle all the time because we were trading through that year. And then we had the Jubilee last year. We talked about that quite a bit. Now we're out of it. And I'm actually very glad that we are, because having to cover that week by week when really no one else wanted to talk about it, could get repetitive after a while. But for anyone who's new here, that was essentially how that all went down. And we have to think about that, right? How this 2020 correction was not necessarily weird or random as much as it was baked into the ritual cycle of the market maker and the global elite. If you look at when C19 effectively was declared a pandemic, that was exactly 222 weeks after 9/11. Exactly 222. These numbers aren't random. They don't just come out of nowhere. These number sequences are powerful and they happen for a reason. And, well, that's why you're all here, because you're interested in this numerology thing. So I just want us to consider that we're not in that energy right now. Unless there is a black swan event that triggers an entire market sell-off, it would be very weird to see Bitcoin correct that much right now. So anything's possible in the matrix, but around Shemitah years is where we typically get the major black swan events that affect the markets. Like the year 2000, we had the dot-com bubble. In 2008, we had the subprime mortgage crisis. In 2015, we had the Asian markets correct. In 1999, the bonds market. 1987, Black Monday, and so on and so forth. These big market shakeouts are happening during the Shemitah timeframe, not outside of that. So our Shemitah that we just traded through was 2021 through 2022. The year leading into the Shemitah was ritualized. That was 2020, as we just talked about a moment ago. Then the world was in a lockdown, literally for around 2 years throughout the Shemitah. And then once it was over, everything went back to normal. How interesting. So remember, from September 2022 throughout September 2023, that was our Jubilee year. Jubilee comes around once every 50 years. We're out of that now. And right at the end of Jubilee, that finished off with a ritual of Israel declaring war. So now this war narrative that started to really become the topic of everyone's conversations, which was Ukraine-Russia. Phase 2 was what's going on right now with Hamas and Israel. And then phase 3, in my belief, will be China. and America will really enter the conversation during the year of the snake. But we don't want to get too far now. I'm just letting you know the play-by-play. So now we're here in 2024. We're out of the Shemitah and the Jubilee energy completely, and we won't need to think about that until pretty much 2028 to 2029. If we wanted to keep the year in mind, the year before in mind, it's 2027. So that's not important right now. Anyways, I'm just saying this because in order for Bitcoin to fill that lower gap on the CME chart around 20K, we would need a correction as big as the C19 crash, which would be very weird to happen based on the year we're in now. Also, another thing to keep in mind, based off of eclipse cycles, since we talked about that a little bit earlier, and these eclipse cycles have been our crystal ball here at Waters Above. Well, I'm going to show you eclipse by eclipse, and it's pretty fascinating stuff. Let me open up this chart, and you'll see exactly what's going on here. Also, hope you're all doing amazing. It's always great to reconnect every week for these red pills. Now, I know this looks like a lot, guys. There's a lot of lines going on in the chart, but we're going to isolate it out to just two things, all right? It's going to be the second solar eclipse and the third solar eclipse. And you can see second right there and third, and I have all of them marked off since the beginning of Bitcoin's trading history, okay? What I want to talk about right now is if you compare our second solar eclipse of a solar cycle to our third solar eclipse of a solar cycle, we always close the week of the third solar eclipse higher than the second solar eclipse. So going back to the week of the second solar eclipse that we just passed through in October, Bitcoin closed off that week at 27K. Now, what's important about that is that's exactly at our macro 382 fib. I want you to write this stuff down, by the way. Take note of this stuff. Another thing to mention is when I measured the difference between the weekly closes on all of these eclipses, the lowest percentage gain that we had between the second and third, by the way, remember, we always close higher. Well, the lowest percentage gain that we've had off of the second solar eclipse into the third was 25%. And it was in this last iteration right here that we had between December 2019 and June 2020. Remember, we had the halving around that same time, and we had the C19 Black Swan. So we had a huge flash crash in between, but we still closed the third solar eclipse higher. And that was about a 25% move from eclipse to eclipse. Okay. And by the way, I'm going off of weekly closes, not on daily moves. So with the daily, you have tails to the bottom and wicks to the upside. It was much more than 25%. It was like 30 to almost 40%. But on weekly closes, that's giving us more conservative data to consider, okay? So if we put 25% on Bitcoin right now, off of this eclipse level of around 27K, you can see that 25% up would be bringing us to slightly below 34K Bitcoin. So that's actually a very important technical level because that's right around our 0.5 fib. I know it's a little bit hard to see because I have this line coming through the screen. Maybe I'll just delete that line. It's unimportant. You guys know how to read the fibs. So just consider that, all right? If we were to look at that level of the 0.5 fib, it's right around there. That 20 to 25% gain from the prior solar eclipse. So we had two levels to keep in mind. We have the solar eclipse level of 27K, which is the 382 fib, and then we have the 0.5 fib level. The fibs are actually doing a lot of the work for us in this case, just because of where the solar eclipse closed off on. So I think this is great to be aware of because we are now kind of halfway through the second and the third solar eclipse, and a lot could go down between here and there, right? The next 70 days or so. I want you guys to be prepared, and that's why I'm sharing this data with you. So it's likely that if we do have a deeper correction, that it's to come sooner than later. It should probably be coming soon, before the eclipse, and Bitcoin should be closing off the eclipse week of April 8th, at least around the 0.5 fib. We'll call it 32 to 34K Bitcoin. Take note of these numbers, meaning that leading into April 14th to be specific, right around April 14th, Sunday, the weekly close, Bitcoin should be slightly above 30K, based on the data, not on WatersAbove's opinion. And consider how when Bitcoin is initially trading into this golden pocket territory, or what I'm calling the automatic rally of this cycle, we at least backtest the 0.5 fib. That has happened in every cycle since 2012. So a reminder that this is a technical target, somewhere between 32 to 33K Bitcoin, and we'll just say around 30K. Again, just the technicals, no drama, no sensationalism. And if we were to take from this 49K rejection that we got down to around these April 14th highs over here, it would be about a 37% correction. So that fits perfectly into what we typically see Bitcoin do after an automatic rally, about a 30 to 40% correction. That's the sweet spot. So as I was telling you earlier, anything below 30K is more considered the extremes in the data. And if we were to have something crash all the way down to 20K to fill that lower CME gap, that would need to be a big isolated event. Like, I'm not talking about China banning Bitcoin for the 700th time. I'm talking about like a global market crash. That would be the only thing that I could see facilitating such a large correction for Bitcoin at this time, especially with these Bitcoin ETFs launched and the conversation getting across the board bullish. I think the greediness is coming to an end, but that's just because a lot of people got suckered in last minute to this bull trap. But if we were to come down to about 30, 32, that would reset a lot of the greed. And generally, I think it's more than enough of a correction. If we were to see something down into the low 20s, it would have to be because the overall market is going through some liquidity crisis, some big issue. And in an election year, that's very rare to have that occur. It's very rare. The only times we've seen that in an election year or around a new president taking over was because of a Shemitah, which again, talked about earlier, nothing to do with what we're in right now in this current cycle. So we're going to go over to the Bitcoin weekly chart now. Turn off this noise. We're going to pull up some of our moving averages, and you could see something crucial here. We have the dark green moving average and the white moving average. This is your 200 simple and your 55 simple moving averages. And they're currently right at the levels we were just speaking about, around 30K on the nose. And also, we've never had this 55 cross above the 200 to the upside. So that would be the first time in Bitcoin's history seeing that cross happen on the weekly chart. So that'll be interesting. But we can see that the first time this crossed to the downside, which was also the first time this ever happened, was right around Bitcoin moving into the first phase of this bull run that we're in now. So this shows us the lower support right around the 30K region. Again, kind of confirming what we were talking about moments ago. And on the monthly chart, if we were to go over to that, we're going to be pulling up our exponential moving averages. All of our EMAs are in a bullish posture right now, except this 34 EMA is slightly below 30K. Now, all of our key EMAs are above 30K. And with this upcoming monthly close, the 34 will pop above 30K as well. So this is all bullish across the board. We're in a bullish posture with the 8 above the 13, 21, 34, 55. We could see the 55 was effectively backtested back on September 2023, right at the end of Jubilee, before we moved into what could be called phase 2 of this current cycle. So now that we've topped out in this automatic rally, if we were to correct that deep, as deep on like a wick, we know that this is going to move up to around 28K. And like I told you, anything below 30K is a gift. It's probably going to be bought back very quickly, and it's likely to happen before our eclipse. It's likely to happen before the eclipse. Seeing sub 30K Bitcoin after the eclipse, that would be interesting. I'm not close-minded to that because we have seen corrections after every single third eclipse of every solar cycle. But typically what we see around that third solar eclipse is a very low volatility phase, And let me talk about that really quickly because that could be filling in some gaps for people. So we're going to go step by step here. I'm still looking for February for this correction to play out. And this correction can, of course, continue into the month of March, and then a slight recovery into the solar eclipse of April 8th to close off that same week on April 14th higher than 27K Bitcoin. And one thing to note, I'm still considering that the market can stay generally sideways after the solar eclipse throughout the months of April, May, and into early June, which is a pattern that I've revealed to you all months ago. It was something that I revealed when we were going through the January 6th through 8th top theory. Now I don't think we could call it a theory anymore because it's 75% of every January tops out between January 6th and January 8th. So it's pretty much cemented in that those are key dates. And when I was sharing that analysis with everyone in advance before Bitcoin even went up to this 47 to 49K region, we were talking about how when we top out on January 8th being our highest daily close, we in some instances don't close higher on a daily close until July. In some instances, we have a somewhat bullish March and April, but it's after April we get a deeper correction in crypto. And now when we look at the S&P data going back like 100 years pretty much, we see the same pattern. It's this sell-off in April, and then we have what I would call a really last-minute buying opportunity in May, June, and then recovery out of that. So just keep this stuff in mind. Let me finish this thought off and then we'll move into just our traditional analysis and then keep this episode moving. So of course we are likely to have a ritual happen on the world stage by mid-March or mid-April. That's to be expected, because that's the case in most years, but don't worry, I'll be covering that more specifically in my Year of the Dragon Decoded that I'll be releasing at the start of February, so you could be looking forward to that. I will absolutely have it launched before Chinese New Year, so don't worry. And Chinese New Year this year is on February 10th. It's right around the new moon of February, so we can have the market holding stable as we correct through this month's full moon, which is just in a couple days. A little buyback into the month of February, new moon, and then a deeper correction coming into the end of February, which I personally will be reaccumulating heavy again around that time. So just to finalize the thought on this, and then we'll get into the traditional TA. I'm looking into the end of February to be buying back what I've de-risked. So you are all well aware, I've been transparent about this, that I de-risked my Bitcoin around 47K. Then I de-risked my Ethereum around this 2,400 to 2,500 range. I'm looking to take what I sold and buy back, not just all Bitcoin and Ethereum, but also accumulate larger positions in my altcoin holdings. And if you are unaware of the altcoins that I'm interested in, a couple podcasts ago, I did the what I'm buying or what I'm investing in special part 2. I will be every 2.5 to 3 months doing that series. So part 3 will be coming right before the lunar eclipse in March, and then part 4, 2.5 months later, part 5, 2.5 months later, and I'll continue as we track this bull run. I thought it would be a good idea because then it just keeps you all well aware of where I'm at with my investment thesis. I could be open and transparent with all of you guys. Many can learn from this, kind of get like a, method to my madness, if you will. And it's just kind of fun to keep track of it as we go. So anyways, now is the perfect time to get into the charts and review what's been going on over the past week with some traditional TA. And I just wanted to load up this chart to kind of get started today because It's the Wyckoff accumulation schematic that we've been keeping in mind for a long time now. I think I drew this out at the start of last year. So it's about a year old. We now have some more data that's come in. A couple things to consider is we have this red trend line, which was here in Christmas time of 2022. We got a bounce here on the black swan of March 10th with the retail banking crisis. Another bounce here in June before this kind of double top effect set in. And then one last correction to 25K, which is a very important level. And it's why this dotted line is here now. And since we've had a double test on this 25K area, we've moved into the next phase. And we're now, what I believe, finalizing our automatic rally. It'll probably be some weird head and shoulders pattern. Anyways, I do suspect a correction to the low 30s. We just talked about that for the last 20 minutes. So that's why this red dotted line is here. It's showing you where we would be back testing. And it's very sensible. You see right here where the dotted line starts was where we broke to go into the next phase of the bear market in 2022. Then when we got back up to that level at the start of our solar cycle, which was on April 20th, we got rejected, and then we got rejected again. So we now need to, I don't think we need to, but it's likely that we backtest prior resistance to confirm it as a new support. It's a very technical play. It's what a lot of things do also. And given that we're usually not at all-time highs by the halving, this would be sensible that we complete this move sooner than later. And it would be one of the best last-minute buying opportunities and most discounted you get Bitcoin for the remainder of the bull cycle. Unless, of course, there's an isolated black swan event. We already covered that as well, and the likelihood of that happening. Okay, so we are now double testing the top of this box region, and we have actually, in my opinion, all the data we need to see how the rest of this is going to go. We have the buyback, or we have the sell-off range that's likely, our key support, and our key prior resistance that is yet to be backtested as a new support. We also have a double test at the top of this 47, 48K area, check. And now we are anything that's closing above this level right here would be, and anything above it would be called the SOS. Okay, so I'm going to type that in for everyone. Sorry, we have so many different things going on, but I'm just going to get this SOS typed in so we can leave it. And then what this stands for is sign of strength. And that SOS would make the most sense moving into the next eclipse, or the fourth eclipse of our solar cycle after the this hemisphere summertime into what we would call the fall. So yeah, somewhere August, September, that would be likely time to start moving into retesting prior all-time highs, around 60 to 70K Bitcoin into the end of the year. Right around that time, and then we'd be moving into what's called phase E in the Wyckoff accumulation. So we have the box tested at the top. We have our median line to consider. We have a lower correction level if we are to dig deeper. And that's all the data. So this is great. With this test, and if we start to break below the 40K area, we could really confirm that this is the top of our box. And we want to know that because horizontal trading ranges are way more powerful than any other way to trade. So let's move on to the Bitcoin CME chart. And we're going to go on the 4-hour. All right, we had our fib pulled from this swing high here on December 8th down to the swing low. We have traded into the 1618, which is technical. It's the golden ratio. We got rejected and have since started closing some new lows. We have double bottomed. I believe that we have the CME chart opening in a couple hours, so it's going to be trading right around where Bitcoin's trading at now. There should be no gaps. We already filled this gap last week, and we still have this lower gap. I do believe that will be filled. It's very likely, considering we're only 4% away from it, 4 to 5% on the CME chart. So once that's filled, now we would just keep in mind our lower targets, and you could see that Bitcoin actually built a lot of trading range as it just moseyed on up into this 40K area. That is actually quite a bit of trading range for this vertical move, and for this horizontal range here, backtesting this 31 area would be what I shared a little bit earlier about the April 14th highs, and then we have a bunch of these rejections before that last correction here in June, July, around 31K as well. That would make a lot of sense to backtest for sure. If we start to close below that 34K territory, we're talking tails, just wicks to the downside that could be bought up very quickly. But I do think once Bitcoin starts trading into this mid 30K area, since we have so much trading range here, it's not going to feel so crash-like. It could kind of just be slow, arduous sell-off like what happened over here. You see this? Just very choppy into the downside. That's kind of what I think we're going to be moving into now. But then filling this gap below would confirm a weakness, especially if we were to close dailies below this 39.6 level on the CME chart. Now I'm going to go back to the Bitcoin chart really quickly. Going to talk about this from the Bitcoin spot perspective. And first things first, we have to look at our daily chart and we have to look at our moving averages. Because there's a key cross that I brought up for you guys, and it's this 8 crossing below the 55. I gave you this update in advance, very long ago actually, probably 2 to 3 weeks ago. Well, we've had that cross. I call that the wolf cross, and because the 8 went below the 55, that's downside implied. And now you have to consider a couple things. Once we've closed multiple dailies below the 55, that's a sign of weakness. When we have the wolf cross to the downside and we're getting multiple rejections at the 8 simple moving average and we're unable to recover it, that's also a sign of some problems. So we see this happen all the time. You could see the wolf cross here. We had sideways trading was really struggling to recover, and then a deeper correction followed. We could see that happen right here too, wolf cross, and then we immediately just continued down with the 55 being a rejection point. Also, I showed you this already with the prior cycles. What happened over here, you can see we get our wolf cross, we had a bull trap, but then still continuation further into the 200s. Over here, this was perfect example, wolf cross, couple days later, big sharp correction into the 200s. Over here, we have the same effect, sideways wolf cross, last deep correction, and then we recovered. So after we get the wolf cross is really a great time to start getting ready for a deeper correction and a buying opportunity. And of course, this is important if you hold 0 Bitcoin, because any deeper corrections on Bitcoin is going to bring a deeper correction to any altcoins you hold. So this is a solid cross that we've gotten. We're looking at about 4, or actually I would start counting at this correction date. We're looking at almost 2 weeks now of closures below the 8. And I would call it about day 4 onto day 5 of rejecting off of the 8 and still closing below it. Key level, keep that in mind. Now we have the EMAs. They are all in a bearish posture now because we have the 21 at the top, we have the 34 above the 8, we have the 13 above the 8, and we're starting to see the 55 crossing above all of that. So they are flipping into a bearish posture. Not good for the short term. And our 200s are below us, sitting around 33 to 35. That is right where we started our breakout area. So again, keep that in mind. I do think there's a likelihood for us to swipe below the 200 simple at this time. It's not weird. Bitcoin has done it many times. Here during your March 10th Black Swan, we back tested it, and then here we traded even below it. So we typically at the end of an automatic rally like to at least retest the 200s. And I would combine that analysis with the fib levels. So again, I still feel low 30K territory is in the works. Also, we're going to look at the RSI. It's very likely that upcoming, we're going to have Bitcoin trade into an oversold RSI. So anything below 30, getting to about 20 to 22 on the RSI is normal. So any dips below into this 20 to 22 area, it's great. Anything around 20, then we'd start to look for a bullish divergence forming as a recovery signal incoming. So that's enough on Bitcoin and the overall market analysis. Let's look at what's going on with ETH. Okay, so ETH is holding very bullish right now because we're just perpetual higher lows and higher highs, and we have yet to really start closing bigger, or what I would just call worrisome daily closes. I would call it problematic when it's below the 55 simple. So just keep that in mind. Not that we worry about anything. I'm just saying that would be a trigger point to anticipate a deeper correction. So you're going to look for that 55, close below. Even though we'd be holding higher lows, that's a signal that things are going to start getting a little choppy and a little bit more on the bearish bias. So we're well above that because the 55 is sitting at 2,300. We haven't traded that low since the beginning of the year. So like I've said many times, February is the month. So if we took it step by step, step number one is closure below the 34 EMA on an altcoin. Whilst Bitcoin, it would be a closure below the 21. Another would be MACD cross to the downside, as well as any closures below the 55 simple, and then a wolf cross. So that was the play-by-play on Bitcoin as well. When we close below the 55 simple on a daily, then you look for a wolf cross where the 8 crosses below the 55, and then we swipe to the 200s. So it would make a lot of sense for a retest of these 200s, and definitely I'm open-minded to a deeper correction, somewhere between 16 to 17. That's where I would consider reaccumulation. That would be a total correction of about 40%. So if Bitcoin is going to have that 36 to 37% correction, 36 to 37 for ETH would be right around 1,700. So let's call it below 1,800 is really the more extremes in the data, and that would be a gift. When you start getting below 17 into the 16 region, that's really, I would assume you're going to be extremely oversold on the RSI, and these are great opportunities. That's when we're going to move into fear, right? And when the retail or the general market has fear, that means you get bullish. So not a whole lot more to say on ETH. It's just holding structure. We need a direction to be made here, and we're effectively topping out in the short term. We can't get too bearish just yet because the chart's looking pretty damn good in comparison to a lot of other altcoins. So now we're going over to XRP. I have a couple things to bring up in here. We have the daily chart, and first things first, we're having a slight bullish divergence forming on the daily. So you could see price action trending to the downside while RSI is trending up. This is just forming, by the way. So we have a bullish divergence forming on the daily. That's good, even though all the EMAs and moving averages on the daily are not looking so good. This is the start of a signal for some recovery to kick in. Just letting you know. Okay, so what's a couple other things we could bring up? I'm going to turn on some of these drawings. We had this triangle pattern in the micro that broke bearish. I showed you last week that we effectively concluded the measured move to the downside on this big wick down here. We had a kickback to the pattern. What that means is we had a flash crash. We got bought back up into the apex of the pattern. That's called a kickback. And that was a rejection level. So this is really squeezing out bulls from this project. A lot of people are giving up. I'm just giving you the narrative, or I'm narrating what's clearly going on in the candles in the price action. So this kickback gave a momentary feeling of relief, but that's a very dangerous position to be in. Now, we're not getting emotional. We're just telling you how it is. Also a rejection off the 382 and coming right back to the 236. And now you can see we have here all of these rejections at the 236. And that's really what I want to talk about on this level. I'm talking about the micro. I should actually, I think, be talking about the macro 382. So listen moving forward and take notes on this if you're a big XRP holder and you're interested in getting better at reading this chart. You see this 382 fib here, the micro. We're going to delete this and you're going to see a little bit clearer now. We have this crown top distribution rejected off that white line. We got bought back, rejected off that white line. We got bought back, rejected 3 times the charm. We finally broke out. But here's the thing. We've returned back to it again. And that's where we're trading at today. We are holding that 382 fib. Now, if you look at this white line on the downside, this trend line that's been rising, this is in play now for a long time, 600 days effectively. So this is a very strong support level. Now, when we really zoom out, you could see how long it's actually been in play. And if we just called it since the C19 crash, this has been over 1,400 days or 4 years. So that's another thing to note. We have the 4-year anniversary of C19 coming up soon. So we have this flash crash multiple times. You guys see the deal. And it's been 600 days now really interacting with this long-term support line. This is why it's feeling not as exciting in XRP, but what could be important to talk about is if Bitcoin was to have a much deeper correction from here, it might not be as dramatic on XRP as it will be on something like Solana, for instance. And speaking of a kickback, just to give you an idea of what that could look like in another sense, would be what just happened with Solana here. So I'm going to show you, just for the sake of solidifying this analytical perspective and building more, just helping you out more for being able to read the charts on your own. We had this downsloping resistance line. Here was your kickback, and you got rejected out of this level after you looked like you were breaking out bullish because there was a daily close above that level. Here's your kickback, and now we've effectively broken out of this major support trend line. And that's a sign of weakness because you had almost 2 months trading in this way. And that shows me if you're going to get any daily closes below 89 on Solana, that's going to bring you another leg lower. So this is exhausted, and no one cares anymore about Solana now, right? Like, those narratives shift real quick. It was all everyone wanted to talk about was Solana, and then all anyone wanted to talk about was, CAS, and then it's just like it all moves in harmony in a sense, one by one. You gotta get into stuff when it's boring, man, because way too much retail pops in after stuff's extremely overbought. It's a bull trap. So getting back to this XRP chart kickback scenario, and since we've been holding on this white trend line, this is a very powerful support line, but it does not mean that that's as deep as it can go, because we've had plenty of times where we get some tails to the downside, even some daily closes to the downside, but we've effectively held a bullish structure thus far. Higher lows, higher highs. So when we look at the structure, it would really get problematic if we were to start closing dailies below 46 cents. And for me now, I'm kind of just letting this play out if I'm going to be accumulating any more. If it gets under 50 cents, I feel like I kind of have to, just to round out my position based on my overall long-term investment thesis. But we just have to see how this is playing out, because it is back testing a prior resistance level, and that could be a very bullish sign. So now I'm going to move down to this chart right here. Oh, and by the way, like I said, we have a micro bullish divergence playing out on the daily or forming, not playing out is what I should say. So I want you to look at this white trend line right here. This could be a larger pattern that's in play, a macro pattern playing out, and we're approaching the apex of this triangle. We're definitely getting close to the 75% into the apex, which is where you'd have your typical breakout. And now if we were to break down, you can see where this lower trend line is. It's somewhere in this 44 cent area. So this is a more extreme example. That would probably be where I would want to be accumulating if we were to have a deeper sell-off, somewhere around that territory. And now this chart is a little bit different because it's showing you the macro fib. It's showing you the fib from the current all-time high all the way to the cycle lows, which was the March 13th crash. So this blue trend line at the bottom is a little bit more on the extremes of the data, but that's what we have to consider with a very extreme project like XRP. When it comes to price action, it gets moving and it will go in the direction it wants to go in very quick. It'll be very violent, shake a lot of people out. The same thing with FOMO to the upside. So we can have holding this pattern, of course, but if things want to get bloody soon for the Bitcoin play, then of course this is going to break down too. So remember, we have the isolated situation going on with XRP due to this Ripple SEC case in the months of March and effectively the grand trial on April 23rd. That's right around the Bitcoin halving. So who cares if we break bearish right now? We're still looking like we're in a good position for recovery back to these prior high levels, 80 cents to $1. I'm only saying that because, again, if you missed the last Red Pill podcast, I need you to watch that if you're a big XRP holder so you could see where I'm coming from with what I'm about to say. But I kind of feel like there's going to be a similar effect on the XRP price to what just happened on the Bitcoin ETF narrative regarding this SEC case and the grand trial that's happening in April. So I would not be shocked if we get a push into March, into April for XRP, and then once the grand trial is over, a sell-off after that. So I know that's a little hopium kind of, but I am definitely open-minded to that because XRP has been volatile around these key dates tied to this SEC case. And every time there's an update, whether it's real or completely make-believe on X.com, it can shift the price. So just get ready for something like that. And the months that I would be looking for is March and April, based on those dates. So I'm still extremely bullish regardless, although this is very boring. We're just still in accumulation territory, essentially. We're going to be going over to Stronghold token. Now, this was the best chart I can get that was sent to me. This is, I'll be honest, a horrible chart. The data here is unbelievable with how choppy it looks like a lie detector test or some shit. So bear with me on this one. I don't love doing TA on charts that look like this. And on TradingView, I couldn't really find anything that had enough data. So what's going on here is we have information on a chart that has candles back to January 2019. So here we are in January 2024. And if you look at where this was at in January 2019, it's the same price today. Now, is that good? No, that's bad. That's not good at all. Because I don't love using the Bitcoin example, but we have to because it's the largest market cap. If we go back to January 2019 on Bitcoin, look at where Bitcoin was in January 2019. It was trading at $4,000, man. This thing is up 1,000% from where it was, and this thing is back to where it was back then, the same price. So I'm assuming some people want to get excited about this thing now because there was some random breakout, but this is really venture capital at its best. You got to be careful with shit like this. This is not long-term holds. This is like you get a little bit to just build a small venture capital play, and then you de-risk it, and then you rinse repeat through another shit coin, because that's all this thing is. Anything that has made no progress really comparatively back to 5 years ago, whilst Bitcoin has done 1,000% gains, that's not good. Especially what's funny is people call Bitcoin a shitcoin, but we see these examples all the time of when you zoom out on Bitcoin, it's the only thing that has proven itself to perpetually do better over an extended time horizon. And I'm not a Bitcoin maxi, that's just the facts. So this is not a confidence play. You know, you really be looking at this as venture capital. So I'm going to pull a fib from this level right here, effectively around 5 cents. We're pulling it down to the swing low. I'm going to turn this into a log setting so that my data doesn't look crazy. I'm going to move this to the right. And it shows you that we're effectively in AR vibes. So this is in the automatic rally phase. Once we broke above the 236, we shot straight through the 382. This from June 2023 has went up, I'm going to assume 1,000%. There you go, 1,100%. But that's kind of the thing here, is that a majority of the move happened in a couple weeks. And we've topped out right into the 0.5, 0.6 area. That's very AR-like. And since it's already corrected about 36%, kind of like Solana, I do think this is likely to come back to the 236. That would be a full 80% correction from here. The reason I say that is because the way these coins like to move at the end of an AR is they overextend past the 382. They don't hold it. They go back to where they got rejected initially, where they were stuck in this kind of bowl phase or the selling climax area. So you see between breaking down into this level right here where it's red all the way till we broke out, that took 500 and something days. We were down most of the time, barely traded above this level, and then once we got to that level, we shot through it. So just keep that in mind, that coming back to there to retest it is normal. Remember a while ago I said expect 70 to 80% corrections for a lot of altcoins that have done something like this? Well, this is a great example, you know? Now, that doesn't mean a 70 to 80% correction on ETH or Bitcoin or XRP. It's depending on the chart we're looking at. You have to take that into consideration, of course. So the stuff that had these very dramatic moves in a straight line since the last eclipse in October, that's the stuff that's likely to have these 60 to 80% corrections right now. It's not weird. It's just what altcoins do. They could shoot up a couple 100% in a week and then go back down, just like they came up. So yeah, the fact that it's correcting at this level now and trading below the 0.5 fib is definitely a sign of weakness. If I was to give it some leeway and say that we pull the fib from here just because we have a little bit more data, it's right around the 0.5. You gotta look out for this one. If Bitcoin wants to correct deeper, this one's definitely going to come straight to the 382, and then I would not be shocked, as I told you earlier, trading back into this 236 level. I wouldn't want to get involved in something like this until maybe like after the Bitcoin halving, see how that goes in Mayish, June timeframe. And then building a venture capital position in something like this is not the worst idea in the world, because if it was to come back to the 236, you know, you're looking at about 2,000, 2,500% to retest all-time highs. This is what I teach. Just be careful with this particular project. I'm not sure how easy it is to trade, what it's available, like what exchanges it's available on. Do your own research. I would rather go with another project than this one, because there's plenty of other projects that are going to go up 2,000 to 3,000% in this next run. Okay, now we're moving over to Avalanche, which I do believe is a great example of what I was just talking about before, of a project that moved up in a straight line after the eclipse season, and here we are. Perfect example. So we're looking at AVAX right now. You can see that after the solar eclipse, this thing rallied in a straight line, went up almost 500%, perfectly rejected at the bottom of the golden pocket. That's a very normal level to get rejected at, and now we're closing back below the 0.5. How many days has this been going on? This has been going on effectively for a full calendar month. Now I think the next level it's going to is right here around 23, 24, and a 236 retest would be normal. Now another thing to consider is that we had this resistance line that was in play for a long time. It was clear a breakthrough level here at the 0.5 fib, which is effectively where we're trading at now. And it took us until almost 600 days to retest that same level. And it was a falling trend line with lower lows and lower highs. So you have high, lower high, lower high, lower high, and all of your lows until this pivot point right around our last eclipse season, which was the lows of this backup phase here in June 2021. So this is in a horizontal trading range that's been active since 2021, early 2021. And it's filling out the areas of the range that it did not have too much data built in. So that's good. That's strong. And the fact that we did not go much lower in this bear market for this project than the levels prior to the buying climax is a sign of strength. So that's me saying more bullish things about it than bearish. And I would feel more confident purchasing or investing in Avalanche than I would on that last project, Stronghold, regardless of the opportunity to buying back to prior all-time highs and all that other stuff. It's just a more confident play. Okay, so consider this 236 in mind for sure. Let me just extend this out a little bit. And now it would be tough to see it retest this trend line. But, you know, these things are possible, just like we had the C19 crash, what it did to a lot of projects. So consider that this is about a 66% pullback if we get to the 236. And if we were to get all the way down to the double bottom area, it would be 80%. Now look, just want to show you, That has happened before during a bull run, okay? Look at this. This was during a bull cycle. We had an 84% correction before it got bought back. So the people that look at this stuff and they cringe and they're like, there's no way that it could go 80%. Okay, well, you could think that, but the same project we're talking about has done it before. All right. So this was all triggered by the start of a lunar cycle. I'm not saying that it will happen exactly like it did again, but I'm open-minded to it because it's a speculative altcoin. And the same way that it went up in a straight line here on speculation is the same way it could come down. That doesn't mean I'm bearish on it. I'm just telling you, this is the Red Pill podcast. Are you here to take the red pill or be lied to? You know? So I think that this is something to keep in mind because this project has obviously had multiple large corrections along the way. Could see right there, 2 back-to-back 60% corrections. That'd be more what I'm looking for. Like I said, right around the 236, which would be 60 to 65%. That would be a perfect area for some accumulations. And who knows, maybe I'll even get invested if it gets to $15 to $16. We'll have to wait and see. I'll just treat it like venture capital though, under 5% of my portfolio. It's a decent looking chart though, even though it's very limited data. I don't love investing in stuff with such limited data. So we're going to be going over to file. Oof. Okay. Yeah, we're opening up a weekly chart now in file. It's trading. Wow. Yeah, this is not bueno. So this is the 2018 price levels. This would be like when Bitcoin was trading at $3,000. And it's gone up 1,000% since. This thing's trading the same level that it was 2,000 days ago. Not good. Lower than launch prices even. Yeah. All right, step by step. Let me extend this out so I can show you what's going on. It has yet to enter an automatic rally. We have lower highs. All these rejections on the macro candles at the 236 fib. That's not a confident thing at all, considering Bitcoin is trading near at the golden pocket and Ethereum is trading at the golden pocket. This thing is down a lot. I'm also going to have to start taking note of the color schemes on some of these projects because we're moving into this year of the dragon, and that's going to matter about what stuff is going to have a good year, what stuff isn't. 97% down from its current all-time high. If it got bought up to all-time high, we're looking at about a 4,000% play. So depending on market cap and depending on how things go after the Bitcoin halving, this might be an opportunity because it's so beat down and bruised. But yeah, this is really a shit looking chart. Let's go to the daily. It could very well return right back to this level of $3.30 again. Yep, be around 60%. Nothing weird. That's what I've been talking about. All right. Well, there you go. That's not confident, but fuck. This thing gets back to $3 and it gets sustained through the halving and get closer to that Bitcoin next solar cycle, excuse me. I mean, just getting back to the automatic rally is 2,500%, let alone prior all-time highs. We're looking at a 6,000 to 7,000% play. It might be worth it if it's available on enough exchanges to where you could make the moves when needed. Yeah, I might keep this in mind. I'm going to save this chart just because it has some long-term data. It has done nothing, honestly. It had a decent bull run. You know, a lot of stuff did at that time. Everything pretty much did. But 97% down from these levels, and it's trading as low as when Bitcoin was at like $3,000 and Bitcoin's at 42,000 today. That's not a sign of long-term hold. That's a sign of trader's coin, okay? Hope you're learning from this. This is absolutely a trader's coin. We're going to move on, though, because there's not a whole lot to say. Incoming correction on Bitcoin, likely. That'll bring this thing down to like $3. Could be a good opportunity to build a venture capital position in something like this, because I do believe it's available on a lot of big exchanges, although there will be liquidity issues with something that's lost 97% of its value since prior highs. Okay. We're making it over to Moonbeam. What the hell is this thing? Okay, I think I've covered this before. Wow. Okay, not a lot of chart data. As you can see, we have a 99.2% correction. It's down effectively 98%. So this is like the Hex chart. Like Hex is down 98% from its all-time high. And it can make moves out of nowhere easily, but don't get excited because it's still down a lot. No offense to Hex. It's a lot of projects have had this type of correction since the last bull run. That's normal. But sustaining being down 98% to this day today is what's kind of problematic. You should have recovered somewhat. And if you haven't been, well then, yeah, you were better off on the Bitcoin play, obviously. So here we have a very important level of the 236, which is effectively a 600-day resistance point. Since we broke through it, we gravitated up to it quite recently, but another big rejection. So keep this 236 in mind because you want to get above the 382 to confirm automatic rally. And returning back to prior all-time highs on this is it's about a 4,000% move. So this is super venture capital stuff. No chart history to work with, very limited. So it's a big gamble to get involved. It just had its second year of chart history today. Yeah, wow, this is not good. Now that I'm thinking about it. Because it's trading as high as it was at the start of last year, 1 year ago. And Solana's up like 800% from then. And this thing is still sideways and effectively down. Anyways, I don't have too much to say about this actually because it doesn't have enough data to get into the specifics, but I think this rejection of the 236 shows that this is not a project to be focusing too much energy into. The buyback on this was okay, I guess. Like even Bitcoin has gone up 100% in this time horizon. So yeah, I wouldn't really know what to share besides this is a very speculative project that I wouldn't give too much attention to because there's plenty of other opportunities. So I'm going to wrap up today's episode here. I appreciate every single one of you. I'm wishing you all a beautiful rest of your week in the Matrix. Hope you enjoyed Red Pill Podcast 147, and I'll be catching you all very soon in updates coming this week. Much love.